Hello, everyone. Good evening if you're in Asia. Good afternoon if you're in Africa or Europe. And good morning if you're in North and South America. We have visitors from all over the world. In fact, just under 500 registrants for this, what we think will be our biggest ever webinar. My name is Rodney Schwartz, and I'm Chief Executive of ClearlySo, the Impact Investment Bank. Earlier this year, together with our partners, Octopus, the investment firm, and Paul Hastings, the law firm, we decided to host a webinar series focused on impact investment funds, private market funds that are generating both returns and societal or environmental impact. The purpose is to highlight the growing role of private capital in solving societal problems. We've covered many different areas: health, renewable energy, topics like impact or greenwashing. And we thought that for this, the last of our series this year, and what a year it's been, we thought we would maybe focus on the future and hopefully a brighter future than we've had this year. So we're focusing on economic recovery and taking a look ahead. I'm going to go through the agenda just quickly now so that you know what's going to happen. Arun Birla is going to introduce the session, and Professor Stiglitz. Professor Stiglitz will then speak, and I will moderate some questions with him. Then Chris Hulatt from Octopus will come on and speak for 10 minutes, and I will address some questions to him. And then Nadina Stodiek from BlueOrchard will come on, and I will speak to her and ask her some questions. And finally, we will play a pre-recorded interview that we did with Jeroen Dijsselbloem from the Netherlands, who could not make it today, but I recorded that with him on Thursday. The final thing I'll say is that this turns out to be quite an international group of people, so you'll be definitely getting an international perspective. The 6 people speaking today come from Gary, Indiana, Eindhoven, Netherlands, Sarajevo, Bosnia and Herzegovina via Ticino, Winchester, the United Kingdom, Brooklyn, New York, you can probably guess who that is, and Limbe, Malawi. And I'm now going to turn over to the person who was born in Limbe, Malawi. Let me invite Arun Birla to come on video, and he will introduce the session. Thank you very much. Over to you, Arun.
Thank you, Rod, and good afternoon to the many hundreds who are attending today's webinar. I'm Arun Birla, Chair of the London office of Paul Hastings, and I'd once again like to say that we're delighted to have partnered with ClearlySo and Octopus Investments on these series of webinars. Impact investing is paramount to us, and the clients we work with are making strides in achieving positive social, ethical, and environmental impact. So it's hugely important. But without further ado, it is my pleasure and privilege to introduce Professor Stiglitz. I'm a bit of a groupie myself. He is a renowned Nobel Prize-winning economist and public policy analyst and best-selling author. He's a prolific writer known for his pioneering work on asymmetric information. I could spend probably the whole webinar running through the professor's achievements, but just to list a few. He's co-chair of the high-level expert group on the measurement of economic performance and social progress at the OECD, and the chief economist of the Roosevelt Institute. Formerly, he was the chairman of the Council of Economic Advisors under President Clinton and chief economist of the World Bank. He was named by Time magazine as one of the most influential people in the world in 2011. He's obviously the recipient of the Nobel Memorial Prize in Economic Sciences from 2001 and received the John Bates Clark Medal in 1979. He's received more than 40 honorary degrees, including from Cambridge and Harvard, and he's been decorated by several governments, most recently France, where he was appointed a member of the Legion of Honor Order Officer. And as I've mentioned, he is certainly a prolific writer and author of international bestsellers, including Globalization and Its Discontents Revisited, Anti-Globalization in the Era of Trump, Rewriting the Rules of the European Economy, An Agenda for Growth and Shared Prosperity, and people, power and profits, progressive capitalism for an age of discontent. Now, I'm sure that you are very keen to hear Professor Stiglitz's views on economic recovery rather than listen to me droning on, and I'm sure you've got a lot of burning questions. And again, I can't emphasize how privileged I am to be able to introduce him. Over to you, Professor Stiglitz.
Well, thank you very much. And it's a real pleasure to be here and to talk about both the recovery, building back better, and the role of impact funds. So let me first begin by saying the light is there at the end of the tunnel. The vaccines are rolling out. There's every reason to believe that the intense uncertainty that we had about how long this would last is diminishing. But having said that, the recovery is going to be difficult. It's not going to be a V-shaped recovery as some had hoped. If, as originally many people thought, we could have gotten away with a 4, 6, 10-week interruption, then we could have had a bounce back. But it's already 9 months, and 9 months has done a lot of damage, and it's likely that there will be further damage in the next 3 months, particularly in countries like the United States, which have not managed the pandemic very well. So what do I mean by damage? What I mean are things like a lot of businesses are going under. That is a destruction of organizational capital, information capital, balance sheets of households and firms are being weakened. The damage is in some cases hidden. One of the things that we did in response to a good thing that we did in response to the pandemic was to have a stay in evictions. But we didn't stop individuals from owing their rent. And now many individuals have 9 months rent due, and they obviously aren't going to be able to pay it. We're talking about the bottom 35% of the population, which is behind in rent. So they've kept their head above water, but only by taking on a hidden debt, which will be hard to work through. So in that context, it is the notion of we are going to need massive government spending. Monetary policy is going to be of limited efficacy for the coming years. Interest rates are likely to remain very low. They were very low before the pandemic, and very hard to go still lower. So I think the reality is that monetary policy, which was what we turned to in response to the 2008 crisis, is not going to play much of a role. It can help with the problem of liquidity, and that's what we needed in the beginning of the pandemic. But what was originally a liquidity crisis, an interruption in cash flow for a few weeks, has morphed into a solvency crisis as firms have been gone without revenues for months and months, and many of them are at the edge or over the edge. So it's in that context, as I say, where we are going to need, I think, a lot of support from the government, and of course from the private sector as well, investment, that the refrain, build back better, becomes so relevant. You know, again, at the beginning of the crisis, pandemic, a lot of people said, well, we're going to go back to where we were in January. As the pandemic went on, I think it became very, very apparent that we didn't want to go back to where we were in January. That wasn't the best of worlds. And the pandemic has exposed some of the weaknesses. Some of them we weren't fully aware, some we were aware, but become even more aware. And even then, we were in the process of a change, of a transition, and that transition needs to become even more imperative. So when I think about Build Back Better, what I emphasize is that we're going to need to think about how we spend money in ways that does double, triple, quadruple duty. And by that, I mean, not only does it help the economy recover, but it has to address a multitude of problems that our society faces. One of the problems that the pandemic exposed was a little bit surprise to many people, the lack of resilience of the private sector. In the United States and in many other countries, we weren't able to make simple products like masks. We weren't able to make protective gear in short order. We thought the private market could handle simple things like that. It couldn't do that. It couldn't make tests. It couldn't make ventilators. We had outsourced much of our economy. And a metaphor that I sometimes use to describe what we had done is, in our short-sightedness, we had made cars without spare tires. You saved a few dollars by not having to put a spare tire in the car. You got a little bit better mileage, minuscule. And everything was fine as long as you didn't have a flat tire. But if you had a flat tire, and especially if you had a flat tire some distance from the nearest gas station, you were in deep trouble. And that's sort of a metaphor for the nature of the economy that we have constructed. Very efficient in a short-sighted sense. We squeezed every penny out of the economy. In the United States, we were proud. We had no spare beds in our hospitals. Well, that's fine as long as you don't have a surge of sick people. But now, throughout the country, all the ICU units are filled. So that was the first problem we discovered, a lack of resilience, and there's a beginning of revisiting that issue. Secondly, 40 years of denigration of the role of government. And we discovered that we had actually weakened government. And in the midst of a crisis, we always turn to government. We turned to the government in the context of the pandemic. We had been warned by SARS and by MERS and by Ebola of the risk of a pandemic. Yet, we disbanded the White House Office for Pandemic, a clear risk that we were facing, and they just disbanded it. We had institutions like the CDC, Centers for Disease Control, that are designed to address infectious diseases. The United States had one of the best institutions in the world. It instructed other countries. But then we defunded the CDC. And that meant we were less prepared, less able to respond to the pandemic when it occurred. So those are two systemic problems that were exposed. The third is that this virus was not an equal opportunity virus. It went after those with poor health conditions, disproportionately people who were poor. And we saw that many of the frontline workers, people that we depend on, were dying. Healthcare workers were dying in disproportionate number. And it reminded us that in the United States, that if you don't have a good public healthcare system, if you don't recognize the right of access to healthcare as a basic human right, if you have deficiencies in nutrition, you are going to have a more vulnerable population And that is exactly one of the reasons why the United States is number one in the number of people who have died from the disease. We have a system that had led to greater health disparities than in other countries. And since 2015, life expectancy today is lower than it was a number of years ago. So these are some of the problems that the pandemic itself exposed. But as I said, we were already facing challenges. We needed to make the green transition. We needed to decarbonize our economy. And we are facing a transition, a structural transformation from an old economy based on manufacturing to a modern economy, services, and most importantly, knowledge-based. And those transitions are always difficult. There are individuals who are displaced. That has both economic and, as we've seen, political consequences. Well, I go through this litany because to go back to the theme of building back better, we have to spend money to resuscitate the economy. And as we spend that money, we need to think about the whole array of challenges that our economy faces. We've done some research with some colleagues at Oxford and LSE that has shown that there are ways of spending money that do exactly what I just said before, a double duty, ways of spending money in a timely way, flexible, targeted, that can actually accomplish two or more of the objectives that I listed above. Now, I think it's, as you say, you've been focused on impact investment, the private sector. Last year marked a moment of intense debate in a way. About 50 years ago, Europe and to a large extent, America went in different directions. In 1970, Milton Friedman wrote a very influential article on shareholder capitalism. And it was published in the New York Times. They had actually a special issue of the New York Times Magazine where they discussed this. Europe, just a little bit later than that, 73, at Davos, Klaus Schwab put forward and advocated the idea of stakeholder capitalism. And countries reflecting these two different perspectives designed legislation and corporate governance that embedded these different views. So many states in the United States passed a law saying that corporations had to focus just on shareholders, and mostly that was interpreted on short-term shareholders. And that meant you're not going to think about climate change. You're not going to think about the community in which you are operating in, the environment, and the national interest, your workers. There was a clear bottom line, what delivered the highest market value, the highest profits. Meanwhile, countries like Europe developed what was called the Rhine model, focusing on a broader sense of stakeholders. And just about a year ago was a defining moment in a way where the vast majority of members of the Business Roundtable, the leaders of our largest corporations, said that the shareholder value maximization model was broken, was wrong, and they adopted stakeholder capitalism. Now, to some of them, it was a publicity. It was what's sometimes called greenwashing. It was another form. But I was at the meeting in Davos just a year ago before the lockdown, and there were many businesses that seemed to be waking up. You know, one very large business said it realized, I find it a surprise, but they discovered that they were paying their workers well below a livable wage. And they said, we're not going to get productive workers if we pay them so little. And it had been doing it, it had been squeezing them for years and years, and it decided to raise the wages significantly of their workers. And there were several other corporations that expressed that view. So I think we're at a moment, this was before the pandemic, where I think the importance of corporate purpose has been heightened. And that, of course, is particularly important in the context of building back better. The question is, how do we make private sector investments that can address one or more of the litany of issues that I mentioned before? I want to just conclude with a few remarks about the international scope of the pandemic and the need to build back better on a global scale. The pandemic is a global event. Climate change is a global event. And these are issues that we can only address globally. We won't be able to stop climate change unless we all, in every country, make a commitment to reduce our carbon footprint. We won't be able really to eradicate the pandemic unless it's eradicated in every country. And we won't have a robust global economy unless we have a strong economy in most of the countries around the world. In 2008, we were lucky that China took up a disproportionate part of the burden of recovery, and it grew at 10, 11, 12, 13%. And that fueled a strong global recovery. China is recovering stronger than elsewhere in the world, but it's a much more muted recovery, 5, 6%. It's trimmed some of its purchases from abroad. It's more a domestically demand-driven recovery. So it's not going to be as much the engine of global economic recovery as it played in 2008. The massive amounts of money that Europe and the United States has spent for their economic recovery is beyond the capacity, fiscal capacity, of emerging markets in developing countries. That was why the IMF proposed a $500 billion issuance of special drawing rights, SDRs. And for absolutely no good reason, no reason that anybody can fathom, the Trump administration opposed that issuance. And in the structure of the IMF, the United States has effective veto power. And so I am hopeful that one of the things that will happen in January is that there will be this $500 billion of SDRs that can make a very big difference. The second thing is that many countries in the developing world, emerging markets, are emerging with high amounts of debt. I mentioned how the K-shaped recovery in the United States, the fact that the people at the bottom are in very difficult straits, whereas those at the top are actually not that badly off. Balance sheets on their side is actually strengthened on part of some. Globally, the same kind of picture. And some of the poorest countries are facing debt crises. Countries that were already over in debt have been pushed towards and maybe over the edge. And unfortunately, we don't have mechanisms for restructuring these debts. In 2015, the UN General Assembly adopted a set of principles, but 6 countries, including the United States and the UK, opposed, and with their opposition, nothing has happened. So there's a lot of discussion about the need for more active private sector participation in this debt restructuring That's going to be absolutely essential if we're going to have a global recovery. So that's basically the story I wanted to tell. The light is at the end of the tunnel, but that doesn't mean that we're going to go to the other side easily. And the next few months are going to be particularly difficult. But in terms of the economic recovery, that is going to take a more extended period of time. And it is in that context where the refrain, build back better, thinking about how we can construct an economy of the 21st century that we would like, addressing some of the defects that we had, some of the problems that we've had that I've talked about. And it's going to be especially important because the debt GDP ratios have risen. It's going to be difficult going forward after the recovery to get additional funds to address many of these purposes. And so as we're spending money, it becomes even more imperative that we spend it well. So let me stop and open it up for questions.
Professor Stiglitz, thank you very, very much for your insights and comments. Really appreciate that. Normally at this stage, I ask people not to forget to send in questions, but already we have questions coming in. Before we get into some of the crunchier questions, I always like to get a better understanding of the people and what they're like. And as I hinted already, you were born in Gary, Indiana, which a colleague of mine tells me is also the title of a famous song from the movie The Music Man. I won't ask.
That's right.
But what I would like to know is how growing up in Gary, Indiana has affected your approach to things and the way you think about the sorts of problems that we're talking about here.
Well, Gary, Indiana is sort of a reflection of the industrialization and the deindustrialization of America. It was founded as the largest integrated steel mill in the world. It was a company town. It was named after the chairman of the board of U.S. Steel, Judge Gary. So you can't be more of a company town than that. And it reflected, you might say, some of the strengths of the United States at that industrial era, but also some of the weaknesses. And those weaknesses, as a young boy, I couldn't ignore. They were very much in front of your face every day. High level of inequality, racial discrimination. The schools were partially segregated, but you saw the differences in housing and standards of living. They just stared you in the face. You had a labor strife. You had economic recessions, booms and bust. So, the 50s, some people look back on the 50s as the golden era of capitalism. I grew up in the 50s. I had a happy childhood, but as I think about what I saw in the 50s, it wasn't exactly a golden age for a lot of my classmates. And it is what drove me into economics. I had wanted to be a physicist. I just loved the mathematics. I loved the idea of, the insights into the world that you got from physics. So I was a physics major at Amherst College. But as I went into my junior year, all those things that I had seen as I was growing up kept gnawing at me. And finally I said, I really do want to become an economist and see if I can do anything about it. But I have to say, the sad note is things got so much worse since I began economics. I don't want to say it's because of that, but it was a golden era compared to where we are now.
Well, it's better for all of us that you took that path into economics instead of physics. And not just economics, but also politics. And I'd like to turn to the political realm and also touch on a question that one questioner has asked, Fernando Silva. Let me set up a scenario for you. So I think it's not the best kept secret in the world that you were not terribly fond of the last U.S. president. I think we can agree that that's probably true. In fact, you were probably one of his foremost critics. And now we have President-elect and soon to be President Biden. The scenario I'm going to set up for you is that Janet Yellen, for various reasons, decides to step down in January. And the president turns to you and says, you're going to be Treasury Secretary. Now, what's going to be your priority in terms of spending and investment? And I want you to focus on the post-recovery environment. Obviously, there's still a lot to do, with the pandemic and closing the gap, as you've previously said elsewhere. But what's your number one or number two thing to do as the new Treasury Secretary?
Sure. Well, Janet was in the first year I taught at Yale in 1967. Janet was my student as a freshman. And we've been close for the 53 years since then. And she went on to marry my best friend from MIT, George Akerlof, who I shared the Nobel Prize with. Yeah, so it's a series of coincidences. And I feel very, it's the first chairman of the Federal Reserve that actually gave speeches worrying about inequality. So she has her work made out for her, but I think she's beginning with her heart and her mind in the right place. I think the two critical issues that our society faces right now are climate change. If our environment is destroyed, it's hard to do anything else. And I am totally convinced about the evidence on climate change. I was actually on the International Panel on Climate Change, second assessment in 1995. It was one of the things I spent a lot of time on. And so I looked at the evidence back then, and we made a mistake. We didn't estimate how fast and how devastating it would be, but it was very clear even then, a quarter century ago, that it would be hitting us hard. So to me, this is an existential issue that we have to face. And I view it as a potential, as an opportunity, it can be a growth story, reorienting our economy. We've been dependent on fossil fuels for 250 years. And the breakthroughs that we've made in the last 10 years in renewable energies has unleashed an energy in our society and our economy. So that's one. And the second one, I think, is we have to do something about the grave inequalities in our society. There's a third point that I raised that is a little bit related to the two. In my recent book, People, Power, and Profits, I go back to the question that Adam Smith raised in his book that's viewed as the founding doctrine, The Wealth of Nations. And I said, he wrote in 1776, before the modern economy. And I asked the question, what is the real source of the wealth of nations? And the answer I gave was science, learning, how we organize complex societies, rules, rule of law, all these things, all these kinds of advances. And we sometimes confuse what makes for a wealthy individual with what makes for a wealthy country. An individual can get wealthy by stealing from other people, or you can get wealthy by running a gambling institution, exploiting them in one way or another. But that doesn't make for a wealthy society. That's just moving the money around from one person to another. The reason we have a higher standard of living today than we did 250 years ago are these advances in knowledge that I talked about before. And in a way, the last year has been testimony to that. The fact that in 1 year, we could figure out what is the source of the death that we were seeing with COVID-19? What does this virus look like? Develop tests, develop therapeutics, and develop a vaccine in 1 year. What a testimony to human genius.
My next question was going to be to try to force you to prioritize some things, but I think you've already given us some of that. I was going to, you've said the environment was top of the list. I guess inequality and I guess employment's related to that as second. I guess education and R&D is third. I was going to also add housing and health. How you would take those 5 things in, if you could just order them: the environment, education, employment, health, and housing. Are you prepared to do that?
No, I think that there was this old expression, you have to be able to walk and chew gum at the same time. I think that these are all interrelated. You're not going to have a strong economy if you don't have a healthy economy. I think some of the problems that we have in parts of our country is we don't have as healthy a labor force as we should. And I think we're paying a high price for the inadequacies, the deficiencies in our healthcare system. So to me, creating a more efficient healthcare system that delivers is part of creating jobs and creating economic growth.
Okay. Professor Stiglitz, you take a global perspective and you've been lecturing and teaching and being involved all around the world. I'd like you to think about all the examples you've seen over the last 9 months of innovations that countries have pursued, and which one that you're prepared to talk about do you think, wow, that country got it exactly right, and why was it so clever? And while you're answering that, I'm also going to ask you to award a wooden spoon for the stupidest idea you've seen. But let's start with the brilliant idea that some country has done and you really think is commendable and other countries could learn from.
Yeah. So in a way, we've been through what economists refer to as a natural experiment. We can't do experiments like physics or like chemistry can do, but countries all over the world have faced the pandemic and faced the economic aftermath of the pandemic. And as you said, some countries have done really well, and some countries have done really poorly. And it's going to occupy economists and social scientists for the next 50 years, trying to parse out what are the things that worked and why did they work and why were they successful. A country that I've been just enormously impressed with, I've been down there a number of times, and in the midst of the pandemic, I talked to the prime minister and I talked to the government a number of times, is New Zealand. They have an advantage of being an island, and they can shut themselves off more easily, but they quickly responded and got the number of cases down to 0. And then they opened up themselves. They have a lot of New Zealanders that live abroad, and they came back because it was one of the safe places. And as they came back, it brought the disease back. And then they responded again, and they brought it down to 0. And because they could get it down to 0, they could begin to restore normal economic activity much more quickly than other countries. But even as they were going through this very difficult task of trying to get the numbers down to 0, they were very aware of this issue of, we talked about, Build Back Better. So they thought about the following question. A lot of, tourism is a big industry there. Some of the big tourist places are in the mountains, ski resorts, and people weren't coming to New Zealand. I mean, they didn't want the disease to be brought in. So what they did is they identified where were people out of a job and how could they use those skills to address the society's problems. And so what they said is, look at, we have a lot of young people who are waiters and waitresses living in the mountains, in the ski resorts. Why don't we try to improve the parks? It's like in the United States, in the Great Depression, we had the Civilian Conservation Corps, and we enjoyed the benefits of what they did in the Great Depression 90 years ago. We're still enjoying those parks. And so they said, well, this is a moment. Let's create a better environment.
I think we're all quite jealous of New Zealand, their prime minister. And it's not just being an island, of course, because I live on an island, Great Britain, and we've hardly handled it in a stellar way. But let's move on to your view of the most boneheaded idea and approach to this crisis. Who's just been legendary in terms of stupidity and done absolutely the wrong things?
Well, there's some competition among the boneheaded. Bolsonaro, Trump certainly are at the head of the class in that. I think that people will remember Trump's suggestion about putting ultraviolet rays down your stomach and chlorine as probably the nadir in of all the bad ideas, absolutely not listening to or understanding science, and then going to the CDC and saying he's a great scientist. Yeah, I think he represents really the pit of what in response.
Yeah, I'm probably not surprised to hear you say that. Let's move on. It's often said that one shouldn't waste a crisis. So we talked about some of your priorities, but are there some intractable problems, things we've never really addressed, that you would go all out, one specific thing to use this sort of post-crisis thinking to address?
One thing I mentioned earlier was that we recognize that we turn to government in times of crisis, and that 40 years of denigrating the role of government has made the government less prepared for a crisis. Michael Lewis wrote a very interesting book called The Fifth Risk. And it was a very interesting because his thesis of his book was precisely that we turn to government in terms of risk, and that he described all the ways in which the capacity of government to address the risks of agriculture and climate and all that had been undermined. The interesting thing is he didn't mention pandemics, which was the risk that we wound up facing. But it's a reminder that actually this is an important function of government. And it's sort of like an insurance policy. And we don't all want to have stockpiles of everything, but if we can feel reassured if the government has those stockpiles and has something, a CDC to deal with infectious disease. It's what we do together to protect ourselves. And we forgot that. That is clearly the most imminent, the most palpable lesson of the pandemic.
Great, thank you. I should just mention one, it's more a comment than a question, and it's something I know you've been very involved in before we leave the subject of New Zealand, obviously the darling of the webinar. A gentleman called Stefano Caponari says, of course, New Zealand was one of the first in broadening the definition of GDP and how we look at the real wealth of a country. And I know that's something you've been very, very involved in. I don't know if you want to comment on that, or should we go on to the next question?
GDP is a very short-sighted view of the world. And one of the reasons I went down to New Zealand a few years ago was actually to discuss with the Prime Minister and with the Treasury, interestingly, issues of how do you build in broader views of societal well-being into the process of allocating money in the budget. So it's called well-being budgeting. So it wasn't just, what I want to emphasize, it wasn't just rhetoric. It was really an attempt to use these ideas into the fiber of running government.
Great. Thank you. I'm sure there'll be a stampede now of people applying for New Zealand citizenship. Let's move on to something you've written a lot about, which is the subject of inequality and its many effects, which is certainly an intractable problem. You may or may not know that today the BBC reported that the CEO of Ocado, one of the listed companies here, made 2,600 times the salary of the median employee at Ocado, 2,600 times. And for the average of the FTSE, it was 73 times the median income of their employees. This is really continuing a multi-decade problem of wealth and income concentration, which seems endless. And you've pointed out on many occasions that it really hurts growth because so much of the rewards have been targeted on the rich, both income and wealth-wise, and the rich have a very low marginal propensity to consume and a very high marginal propensity to save. So it's inflated asset prices, but it's depressed economic growth. How would you address this? And is there any realistic hope that this can be changed?
Well, there's no single thing, but there's a whole multiplicity of policies that are actually absolutely core. And one way to try to divide it into why are the levels of market income inequalities so large? And the irony is that in very countries like the United States, where market income inequalities are very large, in recent decades, less has been done to mitigate that. And so after tax and transfer income inequalities are even larger. So when we ask the question, why are inequalities so large? There are a number of factors. One of them is market power, monopolies. Who are doing very well recently? Well, among those are the tech giants. And the tech giants have created, you might say, a natural monopoly. They're called network externalities, network platform. A general recognition, a very large fraction of the growth in the stock market has been in the tech giants. There's a huge concentration of ownership of those tech giants. And those industries, those sectors are not very competitive. People have looked at the United States sector by sector, and it turns out that level of concentration very high in sector after sector, whether it's drugstores or pet food or what have you. Some cases, there may be a number of different names to the company, but they're all owned by the same person. So in New York, we have Walgreens and Duane Reade. You think that there's lots of competition, same company. So that's one thing. Secondly, we have labor legislation that has undermined the power of unions to bargain effectively. Thirdly, we have corporate governance laws that give disproportionate ability of some CEOs to walk away with a large share of the corporate pie. Globalization has weakened the bargaining power of workers. And so you have unskilled workers in the United States competing with unskilled workers in the poorest countries of the world. And you have deficient education systems, so they can't upskill to get higher returns from the higher skills that they might otherwise have. So it's a whole array of things. No single magic bullet will solve this problem. But just another number that I find very resonating. The minimum wage in the United States, the wage at the bottom, is at the same level as it was 65 years ago in the United States, adjusted for inflation. Now, can you imagine not having a pay raise for 65 years?
I think that says a lot. I guess another issue which reformers are praying for is tax reform, fiscal reform. Many people advocate, as you know, radical tax reform to address our ills. I'll mention some of the ideas. One is the universal basic income, which I know you're not a huge fan of, and I understand some of your reasons. Maybe you'd like to share that with the audience. Milton Friedman, who you've mentioned earlier and is not your natural ideological blood brother, shall I say, proposed a negative income tax in the 1960s, which is an interesting concept. It tops up low wages. A Dutch think tank I'm aware of called X-Tax proposes massively higher taxes for negative externalities such as pollution, and using those funds to reduce the social charges on labor, such as things like Social Security or national insurance, etc., which could be quite appropriate in the current environment. Which models do you like, and do you see any hope for dramatic tax reform or fiscal reform?
Yeah, I am hopeful that there will be tax reform. One of the reasons I'm hopeful is that things are so bad right now that Warren Buffett put it very forcefully a few years ago. He said there's something wrong when he pays a lower tax rate than his secretary.
Yeah. And
we have a regressive tax system, not a progressive tax system at the top. So I think the awareness of this is pretty strong, even among wealthy people, and many of them say, this is just morally wrong, and it's bad for our economy, as you were saying before. The reason I'm not in favor of the universal basic income is I look around our society and I say there's a lot of work that has to be done. We talked about the green transition, mentioned very briefly education, there's infrastructure, caring for the aged, healthcare. What I see is a lot of people who want to work, a lot of work that needs to be done, and in between there's a problem. And so I think the first obligation of the government is to make sure that everybody who wants a job and able to do it can get a job, and that those jobs pay a livable wage. And that's where the notion of some kind of negative income tax, in the United States, we have what's called an earned income tax credit, where the government will increase your wages by 40% to bring you up to a livable wage. The idea that you would be working full time and still be in utter poverty seems unconscionable in a wealthy society. We should be working to make sure that everybody has the skills so that the value of what they produce puts them well beyond that boundary. But to me, those are some of the things that we ought to be doing. Now, in terms of the general principles of taxation, there was one that was emphasized in the 19th century by a very influential, at the time, American economist called Henry George. And he said you should tax land because, if you tax work, people might not work. If you tax savings, they may not save. But if you tax Manhattan is not going to leave the country. The land is going to be there. And more generally, our natural resources are our endowment, if you want to think about it that, and it's there, and that ought to go for common purpose. So that's one, tax things that are very inelastic, and that will reduce the burden that's placed on like workers. And the second principle is it's better to tax bad things than good things. I think work is good. Savings is good. Pollution is bad. So I think the notion that we should be having some taxes on carbon, on pollution, seem to me a way of using taxes to create a better economy, because it creates the right incentives to protect our environment.
Great. Tax things we don't want. It's not like income. Many of the members of the audience, as you know, Professor Stiglitz, manage or invest in funds, funds that hopefully generate impact. Which are the areas that you would urge members of this audience to focus on? And where, in terms of economic activity or sector, and where do you think actually it's really the public sector that should focus? So where should the private sector focus? Where should the state focus in terms of funds?
Well, I think, in terms of the state, basic research is always going to have to be funded by the federal government because it is so basic. It has ramifications for all of society, and so there's going to be an important role of government in basic research. In some very big projects, it may be difficult to get the capital required in the private sector. So again, if you're thinking about developing the internet, the basic research for that, the government did that and made a very big difference, as we know. I think where the private sector is so important is we have so many problems where we need so many ideas, and it's that wealth of ideas that's dispersed throughout all of our society. Everybody looking at all the problems that we need to solve, thinking about them from different perspectives. So 3 areas that I think of are going to be very, very important private sector. One of them is energy. We've talked about we need to make a green revolution. And that's going to be done in many, many, many different ways, is being done in many different ways. And there's going to require a lot of ingenuity and using a lot of basic science that others have already done. But I think we've already had big advances, but I think this is another area, is one. Second, healthcare. All kinds of innovations. I've been very concerned about developing countries, emerging markets. One of the challenges there is how do you deliver a high quality healthcare at a very low price? Innovations in being able to do a cataract surgery, not for the amount that we have to pay when we get it done in the United States, but for $10. Their innovation in India enabled that to happen. And very sensitive because in the tropics, a lot of people have problems of cataract. So that's just an example of the kind of innovation I'm talking about. So innovation, lowering costs, innovation in making breakthroughs. A third area that I'm very excited about is my own sector, education, and including what we might call the education tech sector, the MOOCs, bringing courses to millions of people around the world. That's an example of a lot of thinking going on about what are the barriers to learning. How do we engage in lifelong learning? As our workplace changes, more burden is going to be placed on individuals. So how do we manage this lifelong learning process? So those are 3 examples of areas where investment, and especially impact investment, will make a difference.
That's terrific. You've actually been giving us a plug for several of ClearlySo's clients right now. So thanks for that. We work on deals in all 3 of those sectors. Regrettably, I only have the opportunity to ask you one more question. I'm sorry that our time has run out. Lucy Johnston has asked quite a few questions, Lucy, so I think it's only fair to give you the last question. And I thought that as it's the holiday season, we'd end on a positive, upbeat, more personal note. So Professor Stiglitz, what's your favorite Christmas book recommendation?
That's a hard question.
Well, the rest are easy for you. You see, you're an economist. This one's the hard one.
Yeah, this is a hard question because there are so many interesting books, both fiction and nonfiction, that I'm trying to think.
I can tell.
But you really, that stumped me.
Blame Lucy. Or, well, I tell you what, if you don't want to do that one, end on a positive note. So what is the most positive thing you can say to this audience right now?
Oh, I think that we've looked over the precipice. We've seen how bad things can go. And at least in many quarters, that has renewed, I think, our commitment to make sure we don't go over the precipice. That we've become aware, for instance, in the United States, of the fragility of our democracy. We took our democracy a little bit for granted. We thought 200 and some years ago, they'd written this constitution that everything worked out right. And we could just enjoy the benefits of that. And we now know, no, democracy is something you have to fight for all the time. And you can lose it. And we've seen how close we've come to losing it. And so to me, I think that the optimism is that my students who feel so intensely about these issues and are so optimistic, I think, about our ability to solve it, I think that is what gives me optimism right now.
Well, that's terrific. Thank you. So let me just try briefly to summarize some of that. So there's a light at the end of the tunnel, but recovery will be tough. No further help from monetary policy. And recovery is going to take time and require a lot of government assistance. And the money they spend has to do triple duty, as you said. The shareholder capitalism model is winding down. And we need a strong economy. You're hopeful that the $500 billion of SDRs are approved. Emerging markets are going to be debt heavy. They've been teetering towards the edge, but we need to restructure that. There's going to be a K-shaped recovery. And there's many things we need to do to address the concentration of wealth. But one of them that people don't often think about is antitrust laws, which seem to have gone out the window. And government has a key role to play, especially in R&D. And the three sectors where the private sector should focus is energy, health, and ed tech. Professor Stiglitz, it's been an absolute pleasure to have the chance to interview you. I want to wish you and your family happy holidays. Thank you very, very much for joining us. Be well.
Well, thank you. Thank you very much.
Thank you.
You too.
And now I'd like to slowly turn to Chris, who will join us for the next part of our session. And let me just, by way of introduction, say a couple things about Chris. Chris, as you've heard already, is from Winchester, at least was born there, and originally had a brief career at Mercury Asset Management, one of the foremost UK fund managers. And then together with two friends, Simon and Guy, in his living room, decided that maybe this can be done a little bit better and the financial and investment system could work differently. So Chris, we're going to hear from you for the next 10 minutes about some of the things you're doing or thinking about regarding economic recovery, and then I'll be asking you some questions. Over to Chris Hulatt from Octopus Investments.
Great, thank you very much, Rod, for the introduction. And I guess how to follow Professor Stiglitz, a Nobel Prize-winning economist. So I guess always a particular challenge there. As we near the end of 2020, I think it's a good opportunity really to reflect on just how different things are now compared to 12 months ago. At the end of 2019, the rate of unemployment in the UK was at a 40-year low. And now a year later, we have millions of people who've lost their jobs as a result of coronavirus and the changing shape of the economy. One of the big themes for 2021 for the UK and many other countries is going to be how we create enough jobs to provide opportunities for all of those whose lives have been turned upside down this year. And my view is that the best way to tackle the challenge of getting people back into work is to ensure that we turbocharge the environment for startups and scale-ups. This is where future job creation is going to come from. It's a real opportunity to build back better. And I think, as we've been hearing from Professor Stiglitz, also an opportunity to build back greener. There are three key themes I'm going to touch on briefly in the next 8 to 9 minutes. One is changing societal expectations. The other is how to turbocharge job creation and improve productivity. And then I'll touch on and try and build on some of the points Professor Stiglitz talked about in relation to the role of investors in tackling climate change. Some of the policy suggestions I'm going to make will be aimed at the UK in particular, but I think most countries around the world are facing the same kind of challenges. And so hopefully the suggestions will be applicable more broadly. Now, it's become very apparent over the last few months that societal expectations about the role of businesses really has changed. It's 50 years since Milton Friedman published his concept that the only purpose of a business is to increase its profits. You heard Professor Stiglitz touch on that in his speech too. But for many entrepreneurs nowadays, that concept just doesn't ring true. It feels like it's outdated. And I think for many investors, it's an outdated concept as well. I spend a lot of my time talking to pension funds and other institutional investors, family offices and so on in the UK and overseas. And there's been a real change in the past few years as to how they think. Just to give you one example, from a meeting I had last week with one of the UK's largest institutions, they said that the impact that they have with the capital that they deploy is, to quote, hugely important to them and their clients. And this is really exciting. I just think a few years ago, they wouldn't have made those comments. And really, they're just reflecting the wider changes in society. 70% of millennials think that companies have a big role to play in tackling societal issues. And at Octopus, we totally agree with this. We are in the process of becoming a B Corp. I'm sure some of you on the call today will have come across the B Corp concept. It means that we'll be running Octopus with an equal focus on customers, employees, the community, the environment, and shareholders. What we won't be doing is running the business in such a way where we prioritize making a profit above everything else. Instead, we'll be focusing on an equal presence across those 5 topics. Fundamentally, my aim is to build a company that I'll be proud to talk to my grandchildren about, which I hope is some way off, given my eldest is only 13. If I had to sum up Octopus in just one sentence, I'd say we're focused on investing in the people, the ideas, and the industries that will change the world. Today, we manage about £9 billion. About a third of that is in high growth businesses. We've backed hundreds of years through the ventures and smaller companies teams. We've seen the power of entrepreneurs to make a difference. It's important to me that Octopus plays its part in backing entrepreneurs from a wide cross-section of society, that we encourage and support female entrepreneurs, and that we do what we can to champion policies that make entrepreneurship accessible to anyone, no matter what their background is. And that's important because I think investors and the entrepreneurs that they back are going to have a hugely important role to play in tackling the challenges that we face as a country, creating jobs to replace those that have been lost this year, helping the country navigate its way to net zero, and also levelling up the country. The UK is one of the most uneven countries in Europe. Do we want our society to be like that? Is it right or fair? And what can we do about it? Rod talked with Professor Stiglitz about the problems of inequality. These are very real issues. Only Slovakia and Poland have bigger gaps between their most productive and least productive regions than the UK does. 50% of people in the UK live in regions that are less productive than West Virginia, one of the poorest of the US states. So to improve living standards around the country, we've got to boost productivity. And to do that, I think we need to equip the population with the right skills. We've got to harness the ideas and creativity of entrepreneurs. And the government's got to play its part by creating the conditions to allow businesses to flourish. Developed countries like the UK can't be complacent about their future place in the world. We need more resources to go into R&D. And I think we've got to sharpen up our commercialization of technologies emerging from universities. And we need more focus on the technical skills that are going to be important to building world-class companies. At a global programming competition for university students last year, the vast bulk of the top 20 universities were from Japan, South Korea, and Taiwan, and China. A university from North Korea came 8th. Highest UK entrant was just 13th. This is a snapshot of a world where Asia is doing a better job than Europe in equipping its young people with the technical skills that are going to be needed. Now, of course, not every business is going to be based around that level of IT skills. But I do think as we seek to create the jobs that are going to drive the recovery from coronavirus, we've got to avoid getting sucked into the trap of creating low-skilled jobs just for the sake of getting people off the unemployment list. I read a great account recently of an economist a number of years ago who was on a trip to China, and he was taken to see a dam that was under construction. There were loads of workers moving earth around using shovels, and a local political leader explained that they were pleased that it was creating so many thousands of jobs. And the response of the economist was, if it's creating jobs that you care about, then take away the shovels and give the workers spoons to use. Probably a slightly apocryphal story, but I guess it kind of makes the point. This year, governments around the world have been very focused on preserving jobs. But I don't think enough has been done so far to encourage entrepreneurs to start new companies. Many people have lost their jobs this year. Whole industries are going through rapid change. If you're an airline pilot and you lost your job this year, you can't just call up another airline and get a job. The entire industry is struggling. For many people, the challenge is, what do you do next? When we've done surveys this year, a large proportion of people have said they'd be interested in starting their own company. But 80% of those people said they just wouldn't be able to do so because they don't have enough savings to sustain themselves, even for a month or two, to pay their rent or their mortgage while they get the business up and running. So instead, they just have to focus on getting an existing job as quickly as they could. Starting a business wouldn't be something they could afford to do. And I think we need to find ways to change this and democratize this. If we want to make a difference to inequalities in society, then we need everyone, no matter what your gender, ethnic background or wealth is, to be able to have a fair chance at starting a business. So how could we make the UK a better place to start a company? In those really difficult first few months, I think people need access to mentoring and skills training. And in the case of many people, they're going to need some financial support to help them pay their bills until their business gets up and running. So we've been proposing a springboard program that helps people around the country, no matter what their idea is or where they live, to have access to some financial support from the government, perhaps in the form of a grant of, say, £5,000, as well as that mentoring and skills training. And this could help bridge the gap to the point where a business was able to access seed funding from private investors, or maybe tap into the startup loan scheme that's accessible once you've developed a business plan to a certain point. Now, I recognise the government can't fund everything, but for, say, £1 billion, pretty small amount in the total context of what has been spent this year fighting coronavirus, I reckon the government could help catalyse the creation of maybe 100,000 new startups, and in doing so help to level the playing field for budding entrepreneurs around the UK. The other half of the equation is, how do you make the UK or any other place a great place to scale a business? The perception of a lack of funding for scale-ups has been an issue in many countries for some time. It's great to see more money flowing into venture capital funds in the UK and Europe, and to see the growing enthusiasm for funds that are doing things like investing in particular areas, particular sectors, or investing in female entrepreneurs. These are all things we need to encourage. But if we want a strong culture for scale-ups, then we need to encourage pension funds to play their part more, I think. And we also need to tap into deep pools of capital held by individual investors. Another particular suggestion of ours is the UK government should take another look at ISAs. There's about £300 billion sat in equity ISAs from about 20 million investors. This is almost all in large cap stocks. 7 years ago, the government changed the rules to allow ISAs to invest into companies listed on AIM. This has worked really well. We reckon perhaps £5 billion or so has flowed into AIM-listed companies through ISAs. This is long-term patient capital. It's really valuable to scale-ups. And we think there's now an opportunity for government to make a further rule change to allow ISAs to invest into unquoted companies. If this could unlock another £5 billion, this will be really important capital to help support UK scale-ups. And it doesn't need the Treasury to write a check. It just needs the Treasury to make a rule change about where ISAs can be invested. And before I finish, I just wanted to touch briefly on climate change and the role investors can play in tackling this. Clearly, it was a big topic for Professor Stiglitz. I think he was absolutely right that this is going to be a big focus for the private sector for many years going forwards. At Octopus, we started building our renewables team back in 2010. Today, we have about £3 billion invested into renewable assets, and our team of 80 is busy working on building solar and wind farms in 7 countries in Europe and in Australia. We're proud of the impact that we can have in helping countries decarbonise their power supply. The site we've built this year in Australia, I hope the first of many, will supply enough power for about 150,000 homes. And we want to keep on building more solar and wind farms around the world, and to give investors the opportunity to work with us to play their part, whether it's developing and building assets or being the long-term, the kind of decades-long owner of operational assets. This, to me, is a sector which is a great example of how governments can act as cheerleaders while investors provide the private sector capital to build the assets. The UK, the EU, now also China, Japan, Korea, they've all got net zero targets. And this makes a difference. Already, the institutions I speak to in places like Korea and Japan have said that their government's adoption of a net zero target has raised the profile of climate change in their countries and triggered a change in their own attitudes as investors towards allocating capital to this area, something which I think is a really positive development. We've seen a big change even in the past year in terms of broad investor interest, whether it's pension funds, insurance companies, or family offices. Now, I said at the start about how we see a real impact from changing societal expectations, and I think that is absolutely the case when it comes to renewable energy. I'm pretty sure that most 30-year-olds today would say that they want some of their pension invested in tackling climate change. So I'm really excited by the opportunity to work with like-minded investors, to play our part together in helping to tackle the issues that society is facing and to rebuild the economy, which is a fairer and more inclusive society, and to come together to bring the solutions, the capital, to play a part in tackling those big challenges, such as climate change. Thank you.
Chris, that's terrific. Thank you very much for your thoughts and insights. Let me encourage the audience to send in their questions to you. I have a few I'll start with. Chris, you mentioned that you had some meetings with some large investors and they were all agush about the impact they wanted their funds to create. Do you think this is just a fad, or do you think there's something fundamental changing? And if so, why?
Yeah, I think something is changing. I think society has been evolving. I think there has been a kind of change in bottom-up pressure from what individuals care about and want. Many of those issues, I think, were really well covered by you and the professor in the past hour in terms of the problems of inequality in society, behavior of large companies and so on. This year, to my mind, has really exacerbated this. I think governments have done some things. So I've been pleased and impressed with the way the pensions minister in the UK has been changing the rules to require pension funds to take into account things like climate change in their investment policy. You know, these things done at the top make a difference, and pressure from individuals makes a difference too. Many pension funds I speak to say when they do surveys now of their members, suddenly all these issues like climate change, are really important, and it's not going away. When I hear my kids talk about this kind of topic, it's clear that this is one of those issues that just transcends age, background, and so on. People care. And I think now it's going to be imperative for our industry to show that it has taken on board these lessons and that we're all committed to running our businesses in the right way. And, as I said earlier, every pound that we invest, we want to show that that has some impact. It makes a difference. We love building assets that can play their part in changing things.
And do you think people's reasons for thinking about this have to do with a belief that this will affect financial performance, or a concern for some of the issues that you and your kids share? Do you think it's both? What's your sense?
Well, I think it's been helped by the fact that, when I started at Mercury, as you mentioned earlier, that was 20 odd years ago. There, we ran loads of pension funds on very much traditional balanced kind of ways. We had lots of fixed income, lots of global equities, not much else. Now that way of deploying money has totally changed. Exposure to real assets is going up a lot. So there is already a much deeper pool of money that can go into the kind of sectors which we're talking about today, renewable energy or venture capital, types of property and so on. Partially being helped by the fact that you can't get income off fixed income anymore. Something like $17 trillion worth of fixed income has got a negative yield to it nowadays. So there's this sort of overarching need for yield that I think is really important. And you can harness that to the desire to, I think, have more of an impact. To my mind, it's a question of how deep does that desire for impact really go? How genuine is it? What does that really extend to? But there are some sectors like renewables where there are going to be many trillions needed in the years ahead. This is not a sector that's done and dusted. There's a lot more capital going to be required, big opportunity for investors. And importantly, you can see decades-long cash flow coming from these assets that I think is compelling in its own right as an investment. So we're not asking people to kind of make a low-quality investment. We're asking people to commit their money for the long term into a sector where they can make a difference and generate good income.
Amen. Chris, you mentioned your Springboard program. I felt I'd press you just a little bit and ask, is this a live idea? Is this something government is actually looking at, or is it something you're just trying to get government to look at?
Well, it's a kind of live idea that I've been talking to a variety of stakeholders, MPs, investors, people in Treasury, Number 10, and so on. Now, clearly, everyone is going to government with their favourite ideas at the moment. And as I said, government cannot fund everything. But I do feel that one of the areas that so far there has been less attention on is entrepreneurs. And I think if you put the kind of levelling up agenda to the forefront, which I feel is such a key political issue in the UK, and I think many other countries have got the same sort of inequalities they're trying to tackle, then I feel really passionately that anyone should be able to set up a company. I was really lucky that together with a couple of my friends, I was able to set up Octopus in my lounge years ago. But it was really, really difficult. We didn't earn a penny for 9 months. All of us had to kind of persuade our girlfriends to pay the rent on our flats for all that time because we had no money. It's really difficult. And for many people, it's just a fundamental blocker to even starting to set up a company. And I think that feels a shame. It's great if you're trying to set up a tech business in London. If you're a white 25-year-old man, you know, the world is relatively easier place to raise money than it would have been 10, 20, 30 years ago. But, you know, if you're in a northern town with an idea that's not going to revolutionize the world, but might be something that you and maybe a few other people could earn a living from, should you be able to access the resources to have a crack at starting that business? Yeah, I think you should. And so I hope that as we move into 21 and the government pays more attention to how the recovery will come about and where job creation will come from, not just preserving existing jobs, then I think, is there room for something like Springboard? Yeah, I feel there probably is. Will it happen? I don't know. As I said, clearly many, many demands on government. But if at the minimum we can catalyze more of a discussion about the power of entrepreneurship to change people's lives, then I think that's a good thing.
Let me be a bit challenging with you, Chris. Some people would say that actually the venture capital and private equity industry has actually worsened some of the trends you've talked about. So it's funded largely white Anglo-Saxon males. It's funded entrepreneurs who are generally from the Golden Triangle, Oxford, Cambridge, London. Do you think Springboard is enough to change that? Or how do you think we can fundamentally change the diversity of the sorts of people that get funding and become entrepreneurs?
Yeah, I think it's partially about opportunity for those who want to be entrepreneurs. I think there's also an increasing expectation that we look at ourselves as investors and think, how do we make sure that we're accessible to people of any background? I know our team has done a lot of work to increase the diversity in the team, not just the kind of gender split, but also people from a variety of different countries and ethnic backgrounds. And I think that diversity is really strong in terms of how that allows you to think as a team. You don't just want people who've been to the same university or the same interests. And I think increasingly we're showing that that is becoming a really important differentiator. I think it allows us to understand and relate to a much wider range of people. And whether it's an entrepreneur looking at where he or she might raise funding from, or what VC to talk to, or it's also people coming out of university now thinking, where should they get a job? I don't want people to think that the city or a business like Octopus is something which is only accessible to people from, you know, fancy backgrounds with posh CVs from, you know, top tier universities. We need to all be much more accessible to a broader range of society. And it's something which Octopus is starting to do some work with a charity on to try and make sure that anyone could aspire to a job in the city, that this isn't just some kind of narrow preserve. I saw a figure the other day which said 89% of senior people in asset management companies come from a background defined as, broadly, I would say, kind of wealthy and kind of posh, if you like. I can't remember the precise wording they used for it, but essentially it meant 89% of those people growing up were in a household where the background was wealthy, and often they had a parent working in financial services too. How do we broaden that out? If we can get a more diverse range of people in the investment community, I think it will help encourage a broader range of entrepreneurs too.
Thank you. Chris, last question, and Professor Stiglitz kind of helped you a bit with your answer here, but maybe you can diverge from his answer. So you've gone all out in renewables and become a global leader in that area. Are you willing to share with the audience what you think the next big sectors are that generate impact and returns? Stiglitz went for education and health. Without any pressure, what do you think the next sectors are?
I like the idea of health and education. I think there's enormous need there. To me, though, it's sort of broadening out from renewables. So there's going to be many trillions still going into renewables, but I think a lot of attention will also now be on where else do we need to decarbonize? Power generation in countries like the UK has changed a lot, but areas like housing, real estate more broadly, not much change over the past 10 or 20 years. So I think there's going to be a real need to focus on how do we partner with house builders to create debt structures that really incentivize people to build net zero compatible housing. Seems crazy to me to be building housing today that in a few years' time we're going to have to do loads of work on to improve its energy efficiency or to put in heat pumps. We should be doing that now. I worked out in an idle moment the other day that to install heat pumps in every household in the UK is something like £300 billion worth of capex. That's an enormous funding opportunity for investors. The transition to EVs, similarly, an enormous opportunity. Building purpose-built net zero compatible housing. I think these are the areas that many investors will start to look at in addition to things like renewables.
Chris, thank you very much. And I hope that one day not only your grandchildren are proud of you, but that also your children, the 13-year-old and the rest, will be proud of you as well. I'm sure they are. Just a quick summary. So startup and scale ups for growth, that's where the jobs are. Springboard program, which governments should consider to enable people to have access to entrepreneurship. A change in the ISA rules so that people can invest in unlisted companies, and also a massive focus on the opportunity for decarbonization. Chris Hulatt, co-founder of Octopus Investments, thank you very much. Have a happy holiday. And
thanks, enjoyed it.
Thank you. I would like to introduce Nadina Stodiek. Thank you for joining us. Nadina is with BlueOrchard. She joined 3 years ago in the blended impact finance team. And now she's co-head of ESG and impact across all the practices. So Nadina, I think, has very interesting perspective to share, and I will turn it over to her. And again, please, I do encourage you to submit your questions. Nadina.
Thank you, Rod, for the introduction, and also thank you for having me and bringing a bit the private sector perspective to the discussion, which I hope will also bring some new elements. Although I have to say I saw a lot of synergies between what I am about to say and what has been said, which is actually great. So very briefly about BlueOrchard and what we do. So we are an asset management company, and we are active for approximately 20 years, started from the UN. Actually, it was an initiative from the United Nations back in the days. We are active actually in emerging and frontier markets. So we don't have a specific country focus. We have 80 countries in our portfolio today. So what we see and what we face when we talk today about with our companies, it's really diverse and very interesting indeed. So we have a lot of lesson learned and very interesting insights on what is going on today. Our main goal as a company is really actually twofold. And on the one hand, we really try to empower people through entrepreneurship, which is really in line with what Chris just said. And on the other hand is, of course, maintaining returns for investors. And what is really interesting to see is that this concept, which is today more broadly called as a triple bottom line, has been very unknown to many investors. So many investors have thought this is not really possible for a large number of years. In fact, for example, what we call today impact investing, when BlueOrchard started 20 years ago, was not even existing, and the market was really fragmented. So one really positive thing about today's situation and setup, let's say, is really that there is a harmonized approach on these kind of topics. It's not anymore that every country and every actor is cooking a bit in solution in its own kitchen and not really looking what's going on at the market overall. We're really having an harmonized approach. So it's great to see that within different asset classes, one can follow a similar framework and tackle these global issues. Impact investing has been, as I was saying, has been not really a familiar concept. However, today we have reached a situation, and we also do see that during our investors meetings with different types of clients. We have clients from the public sector. We have also investors from the private sector. We do see that impact and social and environmental objectives are at the top of their list. And actually this year more than any years, because of regulatory moves, which are extremely relevant in Europe, but we believe this is going to be a global trend, but also because of the huge needs. And of course, mega topics were already mentioned: inequalities, reduction of inequalities, of course, in the broad sense of inequality. So we include here income inequalities, we include gender inequality, age inequality, skill inequality. These are all at the core of our work on a daily basis, and of course climate change. So it is actually great to see that we are aligned also with what Professor Stiglitz said before, and Chris. And actually this is not, I think, a coincidence. This is really what is going on from the smaller players to the bigger players. Everybody is now reorienting the investment practices towards these topics, which is, again, it's great to see. One thing I wanted to point out is this notion that reduction of inequality for us is really more relevant in today's context rather than something related to no poverty. Reduction of inequality is really relevant when one talks about economic recovery, because inequalities are really capturing the broader sense. The real problem we have today is that there is a huge gap between rich and poor, and this gap is just increasing. And actually, one of the numbers, the key numbers related to this pandemic is the fall into the extreme poverty of an additional 90 million people following World Bank data. This is a setback into a trend that was actually decreasing since decades. This is really sad, actually, but we do hope that because such big players are reorienting their investment schemes and actually regulatory institutions are coming into play with mandatory requirements, this is going to then tackle properly these issues and actually in a systematic way, which we believe it's really needed. So what we have seen in our portfolio in terms of economic crisis and consequence of the pandemic, as I was saying before, is really related to the emerging market situation. So we have really a combination of external and internal factors. We have, of course, commodity pricing collapsing, global demand collapsing. We have hit on trade and tourism. We have containment measures. These have hit much worse emerging economies versus development economies. In fact, what Professor Stiglitz said in the beginning related to the spending or the support provided by the governments, in developed markets, this support was good. I mean, many economies in Europe have managed to help their businesses within the countries to survive this period. However, this was not possible at all in emerging markets. This is really a challenge, one of the main challenges that these economies are facing. How have they responded to these problems? Well, there have been, of course, short-term lockdowns. There have been some kind of fiscal measures, some kind of monetary measures, but as anticipated, this was not really enough to solve the issue. And today we are still facing it. And as anticipated before, this is going to go on for some time for sure. We have actually thought of the problem a bit from in a two-folded way. So we will try to sustain what we call a stabilization phase, which is really providing liquidity in the working capital form. So more short-term loans, really emergency liquidity that is really badly needed today to the institution that we're financing. And then in a second phase that will come only later on, it will be about recovery and growth, which is then really to come again to what was before or to something even better. Because we don't have to forget this crisis is actually teaching a lot of lessons about business models, what has been extremely outdated in these business models, what has to be advanced from a technological point of view. Digitalization has been an extremely important aspect to look at during this crisis. And in many cases, it has actually helped businesses to survive. And so this is a bit how we will go about it, let's say in these next 2 years, 3 years time. Important to mention is also the role we play in this funding value chain that I think is also making quite a difference. We have in the source of funding, we always go from central banks to tier one financial institutions, which are like the larger banks, let's say. Then we have actors like BlueOrchard and many peers like us that are kind of in between. And we have our companies. We do not extend loans directly to individuals, but to companies. And the companies we have in our portfolios are companies that are often found in a kind of a gray area because these companies cannot access public market financing, cannot go on to bond or equity financing, and they don't have necessarily a line to the central bank to get financing. So they are highly dependent on lending activities from lenders like us. So this is a very high responsibility we hold in this situation. So of course, we had very many discussions around this topic and how we can better extend the loan. So one of the main conclusions that we have come across following these numerous discussions is the need of focusing to micro, small, medium enterprises. We consider these to be really the backbone of societies. Many of these countries have told us if these micro, small, medium enterprises start to fall apart, the whole society comes down. And why? This is because these are oftentimes businesses that get forgotten or they're again too small to access mainstream finance to survive this type of crises. And therefore they then drag basically the whole society behind them. And so it is really important to keep them in the loop, to provide the right type of lending to those. And this is why we also then have refocused, let's say, our investment strategies to really tackle MSMEs in emerging and frontier market, which we believe are the key actors to sustain in this time of post-pandemic or close to hopefully post-pandemic. We know there is a lot of uncertainty and a lot will depend on this, on the vaccination. And unfortunately, we also know that there is a lot of problems related to how this will happen in the emerging market because there is high cost, and like my co-panelists have anticipated, the capacity of emerging market to react to such situation is of course not as quick and as good as in maybe in developed markets, but we really do hope that actors like us will help to ease as much as possible this type of transition period. And really to close then on like my main message on what is really the role of impact investment funds in a broader sense, we really believe that these impact investment funds have to be there where central banks and government support is not enough or is not there, or where companies that would like to access this funding cannot access it. So the impact investment fund has really an additionality role within this scheme, and it has to be there. So this is a bit my message today, and I'm looking forward to answering any questions related to the topics brought up.
Nadina, thank you very, very much for that. I really appreciate your perspective, especially as frequently we get the perspective only of the developed markets, and it's really useful to have your perspective from the emerging markets, because of course this is very much a global pandemic, and we need to recognize that people all over the world are suffering. I guess one thing I'd like to ask you is, in terms of the deals that you structure and the funds that you put together, will investors in those funds typically look for market returns, or are these returns going to be likely to be sub-market returns over time?
So within the product range we do have market returns. So this is an important message. And again, it comes back to the triple bottom line I was mentioning before. Investors have been a bit skeptical in the beginning about this. They couldn't really believe that an investment that is looking or putting so much importance onto social or environmental objectives can actually achieve market returns. But I mean, there are so many products out there in the market today that actually exactly prove the contrary. And we fall within that category where like our offering is all across SDGs, I mean, different impact objectives related to the two key trends, let's say, that I was mentioning before. So inclusivity or the reduction of inequality and climate change. And within those, definitely market return across different asset classes. So indeed, the answer is yes.
Great, and I guess particularly in light of the above average growth of the emerging markets, that's actually quite sensible. But you mentioned that a lot of the focus of your funds now is going to be on developing structures to assist SMEs in some of these developing markets. Can you just, for the benefit of the audience, share the types of structures that you are investing into these organizations in these countries?
So these institutions we deal a lot with, and I mean the majority of our portfolios is actually really extended. The lending is extended to such type of institution are called microfinance institutions, which are actually then evolving into banks when they become larger, let's say, and they have a more solid or a different legal status. But these are really actually banks in the end. They work like banks. They have deposit, they have credit, they have saving. What actually defines them really as microfinance is then the size of the loans. But we do know that these have now actually broadened their product loan type, and they have now extended on to develop really products for MSMEs, exactly for the same reason. I mean, we know, for example, that 60% of the employment in emerging market is provided by medium, small enterprises, and these are the ones that need funding. 40% of the national income is also accounted for through the work of MSMEs. Again, backbone of the society, backbone of really revenues that make these countries work much more honestly than developed countries. So in that sense, these institutions we deal with a lot are kind of looking at that, they're aware of that, and they're developing products exactly for this type of clients. From micro loans that can be up to $2,000, for example, for a micro business, until $250,000 or more for the larger institution.
And are these, my assumption is these are mostly debt. Are you doing any equity products as well?
Yes, we do. We have today fixed income or credit, private debt. We have private equity indeed, which is more into the climate change topic, so more related to climate mitigation, climate adaptation. And we have sustainable infrastructure. These are really the three asset classes. And if I may, I would like to add something on infrastructure that's a bit related to the question of the importance of sectors. we do believe that infrastructure is one of these key sectors really to achieve economic recovery. And we are not the only one to say so. I mean, the UN has released statistics on these. I mean, we know that out of the annual need to meet the SDGs, which are then in the end, let's say the best case scenario for all of us by 2030, 2.5 trillion per year are needed to achieve these goals. And 75% of these money are actually expected to come from infrastructure. That makes this type of asset class and this type of, let's say, projects extremely important. And within infrastructure, definitely digitalization, data management, telecoms. I mean, we have to think of rural areas in Africa that have no access to network. This is such a simple thing. We think we have all a smartphone and we don't really think about it, but there are people they cannot even call with a fixed line. So changing this and giving them access to grids, it allows them to open a huge door, because via mobile access, they can do payments, they can do schooling, so education, they can access healthcare because there is mobile healthcare today. There is a whole range of products that can be enabled through that. So I really believe, and it's not, again, it's not only my humble opinion, it's really what the sector believes, infrastructure is key. And this is also why BlueOrchard has decided to also focus on that specific asset class.
And as you say, infrastructure is very broad. I do wonder if, maybe I can ask you kind of two questions at once. Underneath that, are there sectors of the economy in the emerging markets that you're focusing on? I mean, you've obviously mentioned renewable energy quite a bit, but again, a similar question to ones I asked Chris Hulatt and Professor Stiglitz. And then if you could share with the audience some of the regions or countries where you think there are the best opportunities now, both from a return standpoint, but also from an impact standpoint.
Indeed. So in terms of sectors, what we have, it's really inclusive finance, which is more broadly understood maybe as access to finance, which again goes broader than the micro dimension today. It goes all to MSME access to finance, and it includes also access to savings and all kinds of product related to the financial access, let's say. Then we have climate finance. And within climate finance, there is climate insurance, which is a more complex topic. I'm not going to go into details today. It's a really interesting one, especially in the current situation and climate change effects, let's say, that are happening to emerging economies, and then sustainable infrastructure. So these are really the three sectors. And in terms of countries, I mean, we have seen some economies doing better than others. Fortunately, we actually were surprised to see that many of the countries and institutions that we're dealing with have actually gone through the crisis in a better way than what we expected before summer. So our projections are actually more negative, but definitely economies such as, for example, India and some economies in Latin America, these are more probably, but because of the size, maybe because the market is a bit more developed. And I mean, we know the concept of BRICS is now a bit outdated, but these are really the economies that are a bit closer, let's say, to the stage of a developed market. So these are maybe the ones that could react faster, that have also more funding available. And definitely the smaller ones that are really the ones that are lagging behind, these will be the ones where we're going to also, of course, have an eye, and we're not going to disappear. We don't want to leave them behind, because again, as also the professor was saying, everybody counts in this recovery, not just focus on the top layers and forget about the others. So our role is really to keep being there for all our countries and institutions, let's say.
Fantastic. Again, I feel like I could go on and ask you questions endlessly, but one last question. I know a lot of people in impact investment are starting to wonder, because so much of the mechanisms of the market are still driven by returns. Bert, are you starting, given your role in particular at BlueOrchard, are you starting to embed impact both into the investments themselves, but also ultimately the compensation of the portfolio managers? Are you doing that?
Indeed, this comes actually at a very interesting time, because I don't know if everybody is aware, but 2019 IFC released what is called the operating principles for impact management, which have in turn motivated us to develop what we call today, and we have just launched our B Impact framework, which is a impact ESG framework that goes really top down across our entire universe. So from company level with policies and procedure related to the best practices in impact and ESG, across our products related with impact targets, ESG targets, to monitor progress towards these targets, dashboards, and so on, and then in every investment level. So to answer your question on how we embed this, I can tell you this is embedded in every single step, from pre-due diligence, due diligence, when the loan is then active and then being monitored in our universe, and also at exit we do check, for example, what has been our additionality to the institutions and how this impact achieved will be sustained afterwards. So these are really important aspects for us. And to come to your compensation question, which is a very interesting and relevant, I'm actually very proud to say that it's not only our portfolio managers that are affected by the impact performance, the entire company is actually affected. So what our management has decided, and this has not happened now, it has happened some years ago already, is that there are two elements actually that impact our compensation. One is the financial aspect, so as you say, the return, and the other one is the impact performance. So if the company achieves a great impact, so increased outreach, more people, better outreach, let's say, then also our compensation, one of the employees, will be increased as a result. So I have to say, definitely embedded in the compensation scheme.
Well, that's fantastic. So BlueOrchard is definitely a leader in this area, and that's great to hear. Let me also quickly summarize. So climate and social impact are now at the top of the list. You have a very broad definition of inequality. You're reorienting your investment practices, although disappointed that a lot of people sadly have fallen back into poverty. The emerging markets compared to the developed markets have a huge challenge. You see the phase one in addressing that as emergency liquidity, and then recovery that you see focused very much on the SMEs, and you incentivize yourselves both for returns and impact, which is really terrific. Nadina, it's been a real pleasure and a privilege to have you on and address, particularly from the emerging market perspective, how we need to build back better. So thank you very, very much. And we look forward to meeting again in the future.
Thank you, Rod. Thank you. Bye-bye.
Bye. Now, we will now turn to the final session, which is a pre-recorded interview with Jeroen Dijsselbloem, who is quite a guy. As I know how the interview will go, he is a Dutch politician, a senior center-left politician. He was Minister of Finance in the Netherlands from 2012 to 2017. From 2013 to 2018, he was both president of the Eurogroup of finance ministers, but also was president of the board of the European Stability Mechanism, a key group within the EU that functions on market stability. So really a guy who knows the topic extremely well of what's going on from a macroeconomic perspective in Europe, and also a real expert on monetary policy. Now, the interview will shortly start. I encourage you, you can't ask any questions, I'm afraid, so I can't encourage you to have any questions. You'll see that I'm wearing the same shirt, and for those of you who are concerned, I did have time to wash this and iron it, so I'm wearing the same shirt for continuity purposes, but it has been washed. Now, if all works, here's Jeroen.
Thank you very much, Rod, for your introduction and the invitation to speak and to be with you. I'm sorry I can't be with you live, but I hope that won't hinder the quality of our conversation today. Building back better, I think that's the assignment that we all have, and that many of us feel, both in the public and the private sector, both politicians, but also investors looking for future opportunities. I guess if you go back in time, stakeholder capitalism has been with us for 50 years. Some argue that it all started in 1973 with the Davos statement on stakeholder capitalism. And gradually over time, our thinking about what is actually the responsibility of corporates, what's the responsibility of investors, our thinking has broadened. Nowadays, it has broadened to a large set of sustainable development goals, and more corporates are actively involved in working on these goals and talking about these goals and telling what they're doing. it has also broadened from, let's say, just stakeholders and looking at the interests of stakeholders to the broader society. So when some years ago the debates shifted to purpose, what's the purpose of companies, what's the purpose of the investments that we do, we no longer just think of our stakeholders, the direct interest holders in the company, but we also look at society as a whole, which brings us to the big social issues, the big environmental issues of our time. And I think that's a very, very interesting development. Policymakers and legislators are following it up and will probably put some frameworks in place to give a framework for this responsibility of corporates and investors. But I don't think that the private sector should wait for legislators to impose this kind of thinking on them. I think it's very valuable that the debate is continuing in the private sector itself. There are three major crises at the moment coming together. Of course, COVID, since the beginning of this year, all-consuming crisis, touching upon every aspect of social and economic life. The second, obviously, the environmental crisis, particular climate crisis, but also biodiversity, I feel, should get a lot more urgent attention from all of us. And the third major crisis is the crisis of social distrust in our societies. It is a huge danger to the fiber of our society, the functioning of our democracies, if this distrust and this disconnect between social partners in our society continues to grow. Now, there is also a huge opportunity to connect the dots between these three big issues. Governments are stepping up and acting much more, spending much more, supporting society and the economy much more than they've done, certainly in the last crisis. But that should and could be linked also to making progress in environmental issues, dealing with climate change. And this kind of linkaging between these three major crises, I think that is a huge opportunity. Here lies the challenge. How can we connect the three? Of course, there are also some problems there. The current support that governments are giving to companies in particular is also in some respects standing in the way of innovation. We are creating a number of companies in our economies that really, without government support, wouldn't survive this crisis. And for some sectors, the shakeout, the innovation, the consolidation that should be taking place has been stopped due to the support measures by governments. So there are also some tensions between these different goals. If we want to move on in terms of new investments in creating that sustainable or circular economy, then sometimes it's a bad idea to put more government money in old kind of technologies and old business models. So there's a difficult dilemma to deal with. Lots of things are happening at the moment. Certainly in Europe, I was involved as chair of the Eurogroup, of course, in the previous crisis. I stepped into that role at the end of 2012, beginning of 2013. And looking back at the previous crisis, I think Europe failed to act in the first 4 years of that crisis. Of course, banks were saved. Some governments tried to stimulate the economy, but fundamentally, there were major disagreements in Europe on how to act, whether the problems that we were facing in our economies and in our financial sector were at all a shared problem or a common responsibility. And we didn't have in the monetary union the instruments, the funds, and the political will to act together. Now, in the last crisis, that took us 4 years before the ECB finally stepped up and got involved in supporting the Eurozone economy. It took us 4 years to get an agreement on what was then called the Big Bazooka, the emergency funds, to help the Eurozone get through. It took us 4 years to get an agreement on the banking union, which was, of course, the set of common rules, the single rule book, the single supervisor on the large banks, and one resolution framework for banks that were in trouble. We lost a lot of time, and it makes me quite optimistic to see that that didn't happen this time. This time, the ECB immediately stepped up and said, we will strengthen our efforts and do what it takes. The Commission was very active and has put forward proposals which are almost across the finish line for a new budget and a recovery fund. And many national governments really used the fiscal stability that was achieved, the fiscal stability to stimulate their economies. So on all fronts, I think, and also, of course, the European banks are, due to the policies and the restrictions and the supervision that were put in place, the European banks are much more stable and are now able to contribute to the recovery where they were a huge risk last time. So we are better prepared, and I'm very glad to see that we are much quicker in our response than we were last time. Also, there are many initiatives which give reason for some optimism. The new Commission, of course, has put forward the Green Deal. Many policy initiatives are now going round, and the Commission really has become leading and dominant in the area of climate and sustainability in Europe. Some countries welcome that and support that. Others are reluctant or are worried about their short-term interests. But it's a huge push coming from this Commission. And I think that coincides with a sort of new self-awareness in Europe. And maybe we have to thank President Trump for that, basically saying, well, I'm not that interested in Europe. And that was the most positive thing he said about us. He didn't believe in the EU, thought it was a bad idea. He welcomed Brexit. He threatened trade relations at different occasions and at different fronts. And in the military and security areas, he basically said Europe should do more to protect itself. And to be quite honest on that last issue, I think he was right and is right. President Obama said it before him. But this context and the attention that has been going to, let's say, the rivalry between the US and China has really posed a challenge to Europe. And I think it's a challenge that's welcome, because Europe should be more self-aware, needs to take more initiative, needs to understand and accept that it is an economic power in the world and use that power for the good. And I think that development is showing and growing when I look at topics like climate, but also international standards, consumer protection, data protection, number of areas where Europe really is taking the initiative, setting the bar quite high, which also puts pressure on others to resist, but hopefully to follow. And I hope there will be a lot of cooperation again internationally once we have a change of administration in Washington. So there are lots of chances, opportunities for Europe if we can connect the different major crises that we are facing now. We can really make steps forward. To give you just an example, the European Commission has, of course, taken the initiative for the recovery fund, 750 billion. Hopefully it will be unlocked if, in a sound manner, there is an agreement with Hungary and Poland. But the Commission has committed itself that, if I remember correctly, I'm checking my notes now, 37% of this money, so 1/3, should be linked to climate investments. Now, half of the money will be spent as subsidies and half as loans. But overall, 1/3 of this money must be spent to improve sustainability related to the climate issue. So that puts a lot of pressure on the national plans that are now being developed and will be put forward, and will hopefully trigger also a lot of private investments. And I hope that many countries develop investment plans that actually invite private investment to follow up on that ambition. Italy, interestingly enough, has now said they will free up or use, partly from the European funds, 40 billion to invest in housing and other real estate to make them climate sustainable. A huge effort. And I think one of the first signs where you see that with a European initiative and a European contribution financially, you can trigger bigger ambitions at a national level. Is it just good news? No, I think that the majority of the money spent at the moment in Europe to get out of the COVID crisis is not linked to greening the economy. So there are still many opportunities. And I think both national governments and the Commission could do more. For example, if we look at state aid, the support that's going directly to companies, it will be very useful to connect this state aid, which has to be approved by governments, which has to be approved by the authorities in Brussels, to link the state aid to investments for the good, impact investments, you would call them. And that is an opportunity which is not being used at the moment. I remember the European Commission, when we were talking about supporting our banks, were very strict in the kind of conditions that they set. When the Dutch government supported ING, which was about to get in trouble in the banking crisis, the Commission was very strict and said, you must fully restructure ING. They have to sell off parts of their business. They have to restructure their balance sheet. They were very clear and very strict on the conditions for state aid. Now, I can understand that in the first months of the COVID crisis, the Commission just said, okay, support your companies. And they didn't bring up, let's say, sustainability issues and the kind of conditions I'm talking about. But I think the time has come now. And this would certainly be true for sectors like air transport, the air companies that are being supported heavily everywhere. I think here's a clear example of a sector that needs to step up and work on sustainability. So there are lots of opportunities. There are also good initiatives, plenty of ambition. Yes, it will be difficult. Sometimes the political process that you're looking at will look ugly, but this is, well, partly how politics work and partly the complexity of Europe. But if you take the helicopter view, I think there are good initiatives, there are lots of opportunities, and I hope that this kind of atmosphere of ambition, which I also see in national parliaments, certainly in the European Parliament, I hope that will stay with us for a longer time. Perhaps I'll stop here, Rod.
No, that's great. Jeroen, thank you very much. It's nice to have an optimistic view amidst all this gloom. So we're very encouraged by that. Although it's the first time I think I've heard a European politician thank Donald Trump for anything. So that gets us off to an interesting start. I guess let me just start with one question. There's lots of things that need doing as we come out of this health-related crisis. Can you just, in terms of spending, what do you think are some of the areas of priority? Where would you focus if you were involved in government right now?
I think one of the most urgent issue is the climate issue. We have really very little time. I mean, the climate effects on our environment, on our nature, and we have formulated huge ambition, reducing emissions by 55% in what some consider a pretty short timeline. We are talking about massive investments. And if we wait for the normal life cycle of replacing our cars, replacing our houses, replacing our capital investments, we're going to be too late. So here is, I think, the biggest challenge, and without a very active government which gives clarity on the standards, the goals, also the milestones going towards 2030, going towards 2050, getting the right financial incentives in place and the right financial support where necessary, we're not going to make it. Issue number one. The second is, of course, how can we afford all this? What's this going to do for our standard of living? Is it going to be a risk for our way of life? So here I think it is inevitable that we step up, certainly in Europe, in our spending in education, research and development. Recently, the Dutch government has taken the initiative to set up a growth fund for the coming years. This has 20 billion. And this really will be spent on improving the potential growth of our economy, going into areas where really we don't know what the potential is. We don't really understand the technology and the potential of the new technologies yet, but we need to have money. We need to have money to support those technologies and try and find that potential if it's there. So it's surprisingly, after a long period of a smaller, diminishing role for government, I think we're at a turning point, and a number of these big issues will require a larger role of the public sector of government.
One of the things I like to try to do is to press people and prioritize. So if I were to throw at you what I think are the 5 big kind of impact areas, education's one, the climate and the environment is another, housing would be a third, perhaps employment, obviously coming out of this crisis, could be a fourth, and then obviously health would be a fifth. So because one has to make choices as to what goes first, what goes second, et cetera, if you had to rank those, how would you rank them in terms of priority?
Okay, let me check your list. So health,
education, the environment, employment, and housing. And again, all are important, but as you know better than most, we have to make choices.
Okay, so I think that if we look at the balance sheets of households, housing is already a pretty big chunk, and we need to help people to finance a new sustainable way of housing. If we're looking at the house market, if that's your concern, then I don't think it's about investments as much as regulation. The non-functioning of some of the housing markets, the enormous rise in house prices, the shortage of houses in some of our countries primarily can be addressed by structural reforms of housing policy. So if your question is, where would you put your money?
Exactly.
Housing would actually not be high on the list. The same is, I think, true for health. In our societies, and forgive me my focus, certainly in Europe this is true, we are spending enormous amounts on healthcare already. And in Europe, in most countries, in a public sector, a public regulated healthcare system. I think the big issue there is much more, how can we stop the ever-growing health budget and the ever-growing demand for more healthcare. In the Netherlands, we are now spending 80 billion on a total of 600 billion of our budget on healthcare. I think it's become the biggest spending category. So on healthcare, it's much more about how to regulate and stop the ongoing growth of health spending and the opportunities of technology. So that wouldn't go high on the list, but let's put that on 4. Education will probably go on the top, but it's very different per country. So I must say the educational system in some countries, even countries that spend only the average of the OECD on education, they do very, very well. And Finland is always a classic example. Netherlands traditionally was up there also in that list, but we have gone down. So we need to be much more ambitious in our education policy. But in other countries, it's a major issue. In Italy, for example, whereas in some countries in the north of Europe now, 50% of young people go to the highest level of education, 50%. In Italy, it is 25%. And that is a huge loss of potential. So education, I think, is still one of the best investments, certainly coming from, say, public money, one of the best investments. So education will be on the top. In terms of employment, I think we have to face a big social issue, which is there is a group of our employers, people in our society, that in terms of do we need to give them jobs is becoming a big question. Technology is replacing people faster and faster. Artificial intelligence will only speed up that process. And we really need to start thinking, in all honesty, we've tried it before in the Netherlands and we need to try it again, about social employment. How can we actively involve people that in economic terms will have a hard time getting into the labor market, but socially it's incredibly important that we involve them in society and give all of our people a valuable place in our society and in the workplace. So this is a different way to look at the labor market. It won't solve itself. We will not reach full employment again without taking care of that part of the labor market.
Okay, Jeroen, more so than most politicians I've met, you've been very clear on your prioritization. So we'll move on from that. So thank you for being so clear. And I'd like to jump to an issue which really addresses the last point you raised, this very fundamental point, which is there isn't going to be full employment anymore. And it suggests the possibility of, radical fiscal reform. So as you know, in markets like Finland and Canada, they're experimenting with a universal basic income. Milton Friedman, decades ago, proposed a negative income tax, which is getting another look. In your own country, I'm familiar with an organization called X-Tax, which is looking at dramatically shifting the way we tax things. Let's tax negative externalities much more severely, and let's reduce significantly the taxes on income and labor. Do you think out of this crisis, it's possible that we finally address some of these much more fundamental issues that we've been avoiding for so long?
I think we have to, in all honesty. I think the tax wedge on labor is still far too high. So as labor is the most sort of stable factor to tax, it always seems to get hit when the government needs more money. And as companies have become more mobile and more international, they have been harder to tax. And that is a process which is really undermining the social cohesion in our society. So tax reform is extremely important. It will require a high level of international coordination. I come from the Netherlands. The Netherlands has always been very competitive in tax policy, drawing in international headquarters of multinationals, providing them with all sorts of tax perks. I don't think that's sustainable anymore. When I chaired the ECOFIN board of finance ministers in the EU in 2016, for the first time we got to a deal on tax coordination. And it was only a first step, but it was a big first step because it was the first time. And I think we need to pick up on that work. The OECD has done a lot of work on tax coordination. It needs to be done. Only if we stop tax evasion and have a much more effective international framework for tax cooperation can we rebalance between labor and capital. But that doesn't answer the first part of your question. What about the income of those people that in the private sector will probably or maybe not be able to find an income anymore? So first of all, I think, as I said before, the government needs to take a role here. We cannot accept that a large part of our labor force, people that are healthy and able to work, are not able to participate in our economy. I think that requires creating those jobs. It requires a rebalancing also in the income tax area. In the Netherlands, we've already tried this. It has led to a lot of complexity. So we have to be careful that we don't make it even more complex, particularly for those people that are not highly educated and don't understand all the tax rules and all the subsidies and all the rules that there are. So let's keep it simple and put our effort in really creating the jobs that would help also this lower skilled part of our labor force.
So it sounds like you wouldn't be in favor of things like a negative income tax or a universal basic income, because that would essentially pay people, well, certainly the universal basic income, even if they chose not to participate in the economic system.
Well, I think that would be my objection. Having tax credits in place, I think, work quite differently. In fact, even when people accept low-paid jobs, you could give them larger tax credits to make sure that they still have a socially acceptable income. So that would be a way to stimulate that we still have people in jobs, even though those jobs are really not paying enough to have a proper standard of living. Negative tax credits or negative tax income tax can be a helpful instrument.
Yes, I suppose it's interesting that people are surprised to learn that actually it was Milton Friedman that first developed that concept. But it's interesting. You mentioned the whole issue of social cohesion. And one of the things that this COVID pandemic has brought to light, there hadn't been social cohesion. The disparity between the well-off and the not so well-off had only been growing and growing and growing. Politicians paid lip service to the need to level up or close the gap or things like that. But if anything, one of the terrible tragedies of this pandemic is that the gap between rich and poor has gotten bigger. And a lot of people have noticed that now and are talking about it now. Do you think this will ever turn into anything more than talk? Do you think in the aftermath of this crisis, we will actually see real action on bringing people out of poverty and closing the gap, and a consensus from those who are better off to actually be willing to fund that?
Well, I tend to be a little more optimistic here. So I think, yes, something will come of it. There is a push and a pull factor here in play. And I think the push factor will be that if we don't deal with this social issue, the political shifts that we will then see will be very disruptive. And it cannot be surprising that most populist party, certainly in Europe, are on economic issues very left-wing. On immaterial issues like migration and cultural debates, they are extremely right, of course, right-wing. But on social issues, Salvini in Italy, Le Pen in France, Wilders in the Netherlands, they are left-wing. They plead for raising pensions, raising the accessibility of healthcare for the elderly. And there is a reason for that, because a part of our society is feeling left behind. They also read that every year there are more billionaires in the world and more millionaires in their area, and they don't see, if they still had the perspective to improve their lives, if they still could believe that their children would be doing better than they are, then maybe they would accept that social difference, those income differences. But many people, also due to the flexibility in the labor market, competition policies in the housing market, many people don't see that perspective. They don't feel that they have still the opportunity to improve their lives. The simple lesson that if you do your best and work hard, you will improve your life, for many people at the moment is no longer true. And that will have political consequences. And we've seen that already in the last 10 years in Europe. So that's the push factor. If we don't, we're in trouble. The pull factor is there is so much more potential in people. We are losing so much social capital at the moment. If we could improve the education standards of people, if we could improve their housing, we would improve their health. We would not only save a lot of money in social benefits and healthcare, we would also enable people to do much better and to create an income for themselves. Now, surely that agenda must be appealing. I hope that there's a pull factor also.
Yeah, I imagine there is, and maybe we can move on to this. I guess up until now in our conversation, Jeroen, we've really been focusing on things that the public sector can do. But within the broad swathe of areas you've been addressing, where do you think the private sector and funds and capital coming from the private sector have the greatest role to play?
Well, I think, as always, there are always new investment decisions coming up. And certainly after a crisis, and this has been a major crisis, there are a lot of big choices to make in an insecure surrounding. So I think in close cooperation between the public and the private sector, we need to think about how we can redirect those investments. How can they work for society? How can they contribute to the social and environmental issues that we have? So a very interesting project, the Green Taxonomy, which is drawing a lot of attention here in Europe, is exactly about that. How can we redirect private investments in a way that gives clarity and certainty in which direction to go and what is actually green and how can we finance things with green bonds. If the green bond market takes off, where's that money actually going to be spent? So this kind of cooperation where the public sector gives more clarity on where we're going, what is the ambition we should go for, what qualifies as a green investment, could be very helpful for private investors to determine their course, determine their strategies.
It's sure that the green agenda, renewables, clean tech, all those areas represent a really exciting opportunity. I guess there's a couple of questions that arise there. One is, it does seem to have captured the public imagination right now. And I guess I wonder if that will fade quickly in the aftermath of the crisis, when so many people may find themselves poorer, out of work, in poverty, etc. So I wonder if the intense discussion about green issues, recognizing what you say, which is that we're running out of time and we all know it, I wonder if that will persevere. I guess the second question is, people who have invested in the green agenda generally have found that subsidies and government foci shift really dramatically from one year to the next. Subsidies come, they go, and it's been hard to make longer term investment decisions. So I guess there are two questions. One is, do you think this appropriate concern for the environment will continue sort of once we start to get out of this crisis? And can we expect governments to be a bit more stable in terms of their planning for this?
Yeah, so basically your two questions are about predictability.
Yeah, I guess, yeah.
How can we be sure that the kind of urgency that we're talking about now will stay with us? And how can we be sure that if we decide to invest in this direction, that is the right direction still in a year's time or in 2 years' time?
Yes, exactly.
So the first issue, I mean, there are no guarantees in life, and I don't know, but I think that the climate issue and the urgency around sustainability was already growing and growing before COVID. But your question is perhaps, does COVID change our focus? Are we now more focused on social issues? I'm not sure, but I am sure that it has created even more uncertainty in the lives of many people. And I think we can't underestimate what uncertainty does to people. And I guess it's the same for investors. If you don't know where you're going, if you don't see a perspective, the chances that you will take a risk and take a step forward are not very high. So here's a big issue. We have to create stability and more certainty in the lives of people. And the same is true for more clarity and certainty for investors. That brings me to the second part of your question. Yes, policies are unstable, and I can't deny that. Part of that is to do, of course, with, well, as the Chinese would say, it's one of the downsides of your democracy.
Yep.
You wanted democracy, here you got it. So part of it we have to deal with, but I think that policymakers and politicians should also realize that when their decisions impact long-term investments, they should think twice if they're going to change course every couple of years. We've seen this in sustainable energy. If there is no clear direction, if there is no clear and set goal, if there are no clear recognized standards, sustainable energy will come very, very slowly. And changing policy creates uncertainty, so that's clear. There is also another element of the dynamics of policy. We don't want to have, let's say, take the example of the taxonomy. On the one hand, I think corporates, investors are saying it needs to be clear, it needs to be specific, it needs to be differentiated so that we know what is now considered to be green, etc. But you don't want to fix it for a long time because technology moves very fast, and what is best in class today is not best in class tomorrow, and certainly not in a couple of years. So that kind of adjustment in policy, I think we need to build in, because I can give you examples of what we used to consider best in class in terms of car technology. Now that has changed very rapidly, and I think it should continue to change. I spoke to the producer of vacuum cleaners. He explained to me how rapidly the energy standards for this kind of household appliances, how fast they have changed. And he said, the fact that the government has set these standards and has made them more and more ambitious over time has given a huge stimulus to innovation. So we should also have dynamic policies, taking into account new technologies, new standards, and making sure that the bar is always gradually being at a higher level.
Okay, I think it's about time in our conversation to talk about how and when we start to pay for all this. So many European countries have rules. They've all been broken in terms of government spending. Do you think this is okay that we're breaking all these rules? And when do you think we have to start to pay attention again to these financial rules?
So about the rules, many people say that the fiscal rules, certainly in Europe, in the Eurozone, have been broken again and again, and I can't dispute with that. But I'm very glad, looking back, that we were pretty strict on these rules, kept the pressure on, and that most countries had set their budgets more or less straight before the next crisis came, which has, in most of our countries, created the fiscal space to address the current crisis. In my term as minister, our sovereign debt went to 70%. Now, in the current situation, that doesn't seem very high, but we thought it was worrying, 70% GDP. We brought it back to, let's say, 50, and now we have the fiscal space to let it run up again to 70% or even 80% as far as I'm concerned, if we spend that money wise to get out of the crisis. So the rules have had a function. They have brought us back on track and prepared us for the next crisis. Your question now is, okay, but when do we reimpose rules, and what would the rules be? Currently, they've all been set aside. And I think the debate about will there be fiscal rules again, and what are they, and when will they start ticking in again, I think that's very urgent. To be honest, the current situation in which governments are able to borrow a lot and spend a lot is all dependent on our monetary policy. And if we consider the length of the stick that the central bankers can use, there will be an end to that stick. There's going to be an end to what they can do. Then we better start acting. So I think within 3 to 5 years, governments should really start to address their budgetary issues again. As you know, there have been some legal cases against the monetary policy of the ECB that regarded the programs, let's say, of Mario Draghi. And the ECB always got cleared by the courts because they self-imposed a number of restrictions on their policy. As far as I understand it, in the current program, let's say the Christine Lagarde program, those restrictions have been set aside. So these are about, should we buy bonds equally from all our member countries? And in the Draghi period, that was done. So the ECB bought relatively just as many bonds from Germany as they did from Italy. Currently, that's no longer the case. The second restriction is, of every new bond in the market, the ECB would never buy more than, if I remember correctly, 30%. They never wanted to be the dominant player if there would be a collective action involved. That restriction has also been dropped. So my big concern is, if and when a new court case comes, and it probably will, whether the German Supreme Court and the European Court will then again say, no, the ECB is okay, they are inside their mandate. Because those restrictions in previous court cases were considered to be crucial. And the court said the ECB has remained within its mandate because they have self-imposed a number of restrictions. I'm really worried about this, whether the next court case will go well. And if it doesn't, it will create a lot of uncertainty about the length of the yardstick of the ECB.
It will create a lot of uncertainty indeed. And even without a shift in the legal view on the permissibility of how the ECB is acting, there is, I guess, growing disbelief in the magic of how we're addressing all of this. Countries just issue debt ad infinitum, and the central banks buy it, and it seems just to work a bit like magic, and people are getting quite accustomed to it. Putting aside even an adverse court decision, what market circumstances do you worry about that could bring about an end to this magic? Or do you worry that somehow something will happen that will make people question whether this can just carry on? I'd say it's one of the biggest investor questions in the markets, period.
No, I certainly worry about it. Where's the black swan going to come from?
Quite. And which country will it hit?
Exactly. Where will it land? So yes, I'm worried. It's all about confidence. And currently the confidence is all placed in the central banks that they will provide. But you have to realize that the scope to act, and this is true for more and more central banks around the world, the scope to act is becoming limited. Traditionally, you would say that the role of the central bank is to have enough tools in the toolkit to act if inflation runs up.
Yes.
Now, if inflation runs up in the coming years, let's say in 3 years, 5 years, what can the central bank do? Given, if you look at their toolkit, if they were to raise interest, that would create a lot of stress given the sovereign debts going around.
And with the advent of the euro, we can't raise rates in Germany and keep them low in Italy. That tool has gone out of the window.
Yeah, this has always been my key argument in the debates in the Eurozone. Look, being part of a monetary union has advantages in terms of stability, in terms of investor trust, etc. Being under the umbrella of the ECB gives a lot more protection than a smaller national bank. But it also has a huge disadvantage, and that is, as a national government, you no longer have the tool to manipulate interests or currency rates, exchange rates.
On reflection, was the euro a mistake then?
No, because after having said this, what the disadvantages of stepping into a monetary union, I always say it means that you have to use the instruments that you do have much more effectively. You have to address structural issues in your economy. You have to get your policies right. You have to create an attractive investment climate. You have to invest in the education standards and R&D in your country. You cannot just, in a sense, devaluating your currency was always an easy option and politically not very harming. Yes, the pensions, of course, also decreased in value, but people didn't directly notice that. So I understand why in some countries using these instruments from the monetary toolbox was so attractive for politicians, but it has also distracted them from dealing with the real structural issues in their economy. And therefore, interestingly enough, or strangely enough, we always give a lot of attention to fiscal policy and to monetary policy, and far too little to what I call structural reforms, dealing with the reasons why your economy is structurally underperforming or why your potential growth is structurally below average, or why your young people are leaving your country to look for employment and opportunity in other countries.
And what do you think of some of the priorities in that area around structural reforms across Europe?
Very different per country. In some countries, I would say it's still the labor market. A good indicator is in some countries, the structural youth unemployment is really very, very high, 20-25% outside crisis.
Yeah.
In some countries, I already mentioned, the education system is simply not welcoming the potential that there is. We have agreed many years ago that 50% of our youth should be able to reach higher education. In some countries, we're stuck halfway. In some countries, there is still, for example, in the service sector, a very closed system where competition, where new entries, where new companies, very difficult time to get in. In some countries, it's about the judicial system. If, as an investor, you have to wait 14 years in a solvency case before you have clarity on whether there's still anything of your investment left and whether you have anything coming back to you. 14 years before the court deals with an insolvency procedure. It's terrible for your investment climate. Zoom into what the real problems in countries are. Of course, it's tough to do. It's not popular to do. Many politicians are not that interested in it. They like short-term, easy solutions that will win them the next election. But in long term, these are the big issues.
Yeah, I appreciate your candor and you're looking these issues directly in the face. You've over the course of your career, sometimes you've won plaudits for that, and sometimes you've gotten some stick for that. Do you think maybe, is it possible that as we leave this terrible time of the year 2020, that actually there will be more straight talking by politicians, or will we just revert once things are back to normal to the soundbite and things that sound good and serve short-term political interests?
You're asking me to predict the future. Now, the best prediction is, of course, that things will probably stay the way they have been the last couple of centuries. So here I'm not too optimistic. But to stand up for the not straight talking politicians, many of the voters, many of our electorates are not that eager to hear sometimes the unpopular messages.
But you could still provide them, although you might lose office, that's for sure.
No, well, I think many people are schizophrenic here. They appreciate a politician that talks straight and tells them about the real issues that we're facing, the hard choices that we have to make, the trade-offs that we cannot avoid. But then when the decision is taken and it hurts them in any way, maybe only short term, but who knows what the long term will look like, you may still lose the election. So even though people welcome the straightness and the directness, that's no guarantee that they will go with you into the next term. To give you an example, one of the big challenges still in Europe is the pension situation. Yes. We are an aging continent. This will continue for 1 or 2 decades. Are we prepared to deal with the costs of our pensions? And in many countries, we are not. It's going to put a lot of strain on public budgets. It's going to put a lot of tax pressure on the working people. And of course, relatively, the group of pensioners is becoming bigger and people who are working and paying tax is becoming smaller. It's also an issue in my country. And when you tell people that there are issues to deal with regarding the pension system, well, good luck to you.
Yeah, well, we see what happens in France when that issue is attempted to be addressed. I mean, here in this country, and for the listeners, although I sound American, I'm British and live in Britain for the last 3 or 4 decades. I mean, here we have a triple lock. So public pensions grow by, I think it's GDP or CPI or 2%, whichever is highest. And the electoral calculation that politicians are making just gets worse and worse as the number of pensioners grow and the people who have to pay for it shrink and are less inclined to vote. Are we going to address these intergenerational issues, or is that something we'll have to kick in the long grass for a bit?
It is politically one of the most difficult issues at the moment in all of our countries, because both the cost of healthcare and the cost of our pension system is increasing and will continue to increase. And as I said, the group of people that actually have to pay that in their tax and their premiums is diminishing. And I think that the only way we can address it is, I guess, by straight talking also to the older generation, that they are also responsible for the opportunities and the future perspective of their children and grandchildren. So if you ask them in very general terms to show solidarity with new generations, maybe they'll think, well, they can look after themselves the way I have. If you ask them to think about the perspective of their children and their grandchildren, for example, we cannot allow the money we spend on education to be gradually eaten by the money we need for healthcare and pensions for the elderly. And that is actually what's happening. I mean, not openly, not directly, but in fact, if you look at public budgets in all of our countries,
yes,
spending on education is lagging behind or has even per student dropped, while the spending on healthcare and pensions, etc., is growing and growing and growing. And this is about, do we really want our children to have a lesser education and our grandchildren an even lesser education?
You've been very clear on that. I could go on asking you questions for hours, Jeroen, but we're down to really just the last two questions, if that's all right. So what I'd like you to do, because obviously we're thinking about innovations and how we can address some of these societal problems. You know that many in the audience are thinking about private capital solutions, but I wonder if, just to be helpful, if you could identify what you think has been really great practice, what has been the best innovation you've seen in how maybe private sector and public sector capital join together to do something really terrific. It could be an example from the Netherlands or from elsewhere. And then if you don't mind, as I've already described you as such a candid politician, I'm also going to ask you to present the wooden spoon to pretty much the stupidest thing a country has done in Western Europe, if you're willing to go on record with that. So what's been the best thing you've seen so far that you think really captures the best of the spirit of what can happen when the public sector and private sector cooperate?
If I take a step back, not just the COVID period, but perhaps the last couple of years,
Of course.
I think an extremely interesting development is the cooperation of public government, universities, and top technological companies working together, investing together, technology research labs also moving into the universities, very close cooperation. Of course, you have to deal with all the intellectual property rights, etc. But the cooperation between, let's say, the capital and the power that the high-tech companies can put in, and the new knowledge, fundamental research that the universities are good in, I think that cooperation has led to very, very interesting developments. Some of the most interesting projects that I've seen having to do with developing artificial organs to use in medical appliances were developed in close cooperation between universities in the Netherlands and private companies and private investors. The general problem still in Europe is that and this is a structural issue of our economy, we are very bank-based still. We finance our economy and our companies predominantly by banks. And there is still very little equity going around. But if we want to develop new technologies, new ideas that come from the money we spend on research and innovation, and I think we should spend more there, but if we want to really develop that into a commercial proposal, scale it up, we very often in Europe don't have the kind of capital that's needed. And either the new company, the new tech company then goes to the US, where it's nurtured, supported, the private capital is available, or in Europe, at the best, they are being bought by a bigger company who then uses or not uses the new technology. This is still a big issue. We don't have well-developed capital markets. The risk appetite of banks is of a different nature than it is of investors. So the role of private capital in the European economy really needs to be strengthened. It also leads to a different kind of business climate. Banks are mainly risk averse. They just want to have certainty. They want to have guarantees. They want to see that money come in at the end of the month. And an investor looks at it very differently. He is prepared to put more money in at the end of the month if he believes there is a perspective and a profit at the end of the line. It really characterizes the difference between the European economy and the US economy. this is the general remark. We have seen some more examples in this area. There are more funds being set up also for, let's say, this kind of seed capital, etc. It is growing, but it is still pretty small in Europe.
Yes, that's true, Jeroen, although you'll be happy to know that on the call today are mostly the limited partners and general partners of funds that are actually more often than not equity-oriented funds, private equity and venture capital funds. And I think you'll also be happy to know that in addition to seeking market returns, which they all are, that many of the people on the call today are actually also looking to invest in a way that brings about positive societal benefits and change. I think that's actually a much better way to end this call than to ask you to award the wooden spoon. So Jeroen Dijsselbloem, thank you very much for your time today, for your comments, for your candor as ever. And I wish you a Merry Christmas and a Happy New Year.
Thank you, Rod. My pleasure.
Thank you. Bye-bye. You'll be happy to know that I am not going to summarize all of that. I think the time is late. I did find it very interesting, though, to see how all the speakers really focused on education to a degree that we didn't really anticipate, and that's quite interesting. I'd like to thank all the speakers, Nadina Stodiek, Chris Hulatt, Jeroen Dijsselbloem, and Joseph Stiglitz, who I think have given us a very international perspective on a global problem and look forward, which I think is a very fitting way to end the year. Let me thank them. Let me also thank the people you haven't seen, the people who are working behind the scenes to make this work, in particular, Teresa, Quinyu, David, and Harry from ClearlySo, and all the teams from Octopus Investments and Paul Hastings. Let me thank them for all their work in making this happen. And finally, let me thank all of you in the audience for your interest, for your patience, for your support, and also for your actions in the years ahead. Let me wish each and every one of you happy holidays, and of course, a healthy, prosperous, peaceful new year. Take care. Bye-bye.